Good afternoon. Welcome to LBMA webinars. We are looking at the Silver Market Interim Report and the new uses of silver. I'm delighted to welcome Philip Newman, the Managing Director at Metals Focus, and Michael DiRienzo, the Executive Director at the Silver Institute. So we'll join them in just a moment to hear what they have to say. But firstly, I just want to remind you that if you have any questions throughout this webinar, please just put them in the Q&A function. It should be at the bottom of your screen. And towards the end of the webinar, we'll have Q&A time, and we will get to your questions. If we don't have time, though, of course, we will endeavour to get back to you after the webinar. So without further ado, I shall hand over to Philip. So Philip, whenever you're ready.
Excellent. Well, thank you, Taylor. And thanks also to the LBMA and to Ruth and Adele in particular for inviting Metals Focus to speak and take part in today's webinar. So what I'll endeavour to do over the next few minutes is to give you some key highlights of some of the key areas of supply and demand, and talk about what we think is driving the silver price, and then at the end just share sort of an outlook also for 2020 or the rest of this year and into next year as well for the price. So first of all, a slide that many of you will be familiar with, looking at the gold and silver prices since Jan 2019. And again, just I guess to highlight really a couple of points. Firstly, if we focus on this year and look at the weakness that we saw in silver in the back end of Q1 and into the second quarter, this of course was when silver was underperforming. If you think back, this was really when the pandemic was really, I guess, kicking off, for want of a better word. Gold had started to respond. We see that with the price going through 1600s, but you can see the weakness that we saw in silver. And I think for a lot of professional investors, this I think helped to give them a negative view of silver from a sentiment standpoint, and it really became a bit of a vicious circle. We certainly saw some investors, there were some that went long gold, short silver, but there were certainly other professional investors that were shorting silver outright. And that certainly had a significant impact on the gold-silver ratio that we'll come to in a moment. And of course, when we think about the outlook or the trend in the silver price, there of course are a number of dynamics. It can behave as an industrial commodity, given that roughly half of global silver demand is accounted for by industrial applications. So we're talking about 500 million ounces or thereabouts. But equally, of course, it can behave as a precious metal. And if we look at the first of these two slides I'm showing you here, this is looking at the correlations. And the first of these is looking at the correlation against the LME base metal index. And here, what I think is quite striking is that even when it was a positive correlation, the relationship or that correlation only got up to around 0.4. And that's really, I think, quite important to remember when we come to the next slide. I think what is also interesting is that on the far right-hand side, and you can see at the top of the chart, the white line is the LME X base metal index. You can see how that seems to be outperforming the silver price in the orange color. And that is really because silver is now behaving much more as a precious metal. So as I mentioned, it's important for this chart, remember that 0.4 correlation. And if we look at the next chart, where we're now looking at the correlation with gold, and now you can really see quite striking how strong that relationship has been or become over the summer. And as you can see on the far right-hand side, comfortably getting above 0.9. Now, of course, the relationship with one or the other isn't binary, and it's often a mixture of the two. And it's very much about investor perceptions of silver. For example, is it behaving as a precious metal? Should we be looking at silver from a safe haven standpoint? Or should we be thinking about it more in terms of from an industrial complex? And therefore, what is the, for example, the macro outlook? What is the outlook for global GDP? And so that really gives you a sense of some of those dynamics and how that really plays out in terms of the gold-silver ratio. And at the beginning of this talk, I mentioned that in the back end of Q1 and early Q2, how the ratio had really become overextended. And you can see that from this chart when it almost got to 130 to 1. And that was a record high at that time. But even if we put that to one side, we can see that the ratio from 2011 really through to the early part of this year was almost on an uninterrupted rise. We can see clearly, though, very recently, how the ratio having become very overextended, how it now has fallen quite sharply, and we're now trading in the high 70s. And I guess from our point of view, we don't expect, looking ahead, that the ratio will start to climb again. We think we will now be in a dynamic or a pattern of lower gold-silver ratios going forward. But what's important now is that when we're thinking about silver and the current trends and the outlook, it's very much because we're looking at that very strong relationship with gold. What really comes to the fore, therefore, is what is the macro environment now and how do we see that developing. And here's just a couple of slides, the whole number we could have chosen. This one is looking at the spread between US high yield corporate debt and 10-year treasuries. And what you can see here is how that has come down quite significantly, and it's now back to pre-pandemic levels. That certainly is a reaction to the very good news we've had about the vaccines very recently. And it certainly also therefore reflects that, that growth in risk appetite. And I think that's one of the reasons why gold has fallen and why silver has been weighed on as well very recently. The second of our two macro slides, here we're showing with the yellow line, the spread between 30 and 5-year treasuries, the white between 10 and 2-year. And so you can see how interest rate expectations have risen. Initially, pre-election, that reflected expectations of a fiscal stimulus package in the US. More recently, of course, it's related to the vaccine news. But I think although those expectations have certainly risen, I think it's important to take a step back and really look at that in the context that interest rate expectations still remain low by historical standards. And so I think what you're getting a sense of here is now how important investment demand is. But I think what's also perhaps surprising is that when we look at some of those key investment indicators in the silver market, how the apparent reaction appears quite muted. So what we're seeing here is looking at the net long of the net managed money positions on Comex for silver. And although they have improved recently, I think the improvement is quite muted, and it certainly compares poorly to what we saw as recently as the back end of last year and early 2020 as well. And from our point of view, that certainly reflects what we believe are the issues we've seen in terms of the EFP with the exchange for physical. And what I want to do is just take a pause in looking at some of the supply-demand dynamics and just give you a sense of what we see in the EFP universe. And so on this slide, where on the top left, you can see the silver EFP, on the bottom left is the gold EFP. And so what we've done for both is to take these back to late 2019, just to give you a sense of some of the historical norms, for want of a better word, that we see. And so you can see for gold, how that seems to have returned to those levels. It also gives you a sense of just how heightened these EFPs were in late March and April. And you can see, of course, for silver, how that continued much longer, it seems, compared with gold. And just to really summarize, which I guess many of you on this webinar will certainly be extremely familiar with, the early jump in the EFP reflected, of course, the COVID disruptions that we saw. From a gold standpoint, especially, if you remember, we had the temporary closure of some of the key Swiss refineries that inhibited the ability to recast good delivery bars as a 100-ounce and tequila bar, which was the requirement at the time for Comex. Of course, we had significant logistical bottlenecks with the cessation of most flights as well. And if you remember about in terms of the Comex, it's certainly in terms of from a market making point of view, one tends to hedge local London. And of course, the physical delivery is extremely rare. But even though that physical delivery is extremely rare, given one had those massive problems in terms of recasting bars, in terms of shipping into Comex, that risk became heightened. And therefore, there was a concern about what counterparties want to close out instead of rolling those positions, and one would normally expect. And therefore, that led to this extremely heightened demand for EFP, and therefore that change in the dynamic of what became a long Comex, a short local London transaction. And of course, overlaying that were the added pressure from the position limits. What was interesting, of course, is for silver, and this is where, if you look at the next chart, which shows you Comex silver vault holdings, and underneath that LBMA vault holdings. For Comex, it was never, in our humble opinion, it was never really an issue of there being a lack of silver in New York vaults. It was more about the participants that were holding that silver, and it wasn't necessarily those that were constrained or facing those EFP issues that were the ones that were holding those silver. The reason, though, for putting the LBMA chart underneath is that you can see the dip in the vault holdings at roughly the same time. And I think I think that dynamic, I think, is certainly clear, or that relationship between the dip in LBMA and the rise in Comex. From our point of view, it certainly wasn't a shortage of silver. And when we come to look at the underlying supply-demand dynamics, that I think will become clearer as well. But what was interesting is when we think about the marketplace, I touched on the fact that we didn't see or appear to see a positive response from professional investors on the Comex. What we certainly saw was a very strong reaction in terms of global ETF holdings, which have hit a record high this year for the first time, going through 1 billion ounces. And from our point of view, that's been driven by increased activity among retail investors and high net worth as well. What I want to do now, though, is to briefly, with the time allowed, just now tiptoe through some of the key areas of supply and demand, see what that means for the surplus, bring that back to what we think is the dynamic and the interplay with investors, and then finish up with a couple of comments on the price outlook. So the only element I'm going to dwell on here is mine production. This is showing you our latest estimates that we presented to the Silver Institute as part of the interim very recently this week. And you can see here for mine production, we're looking at a decline of over 50 million ounces for 2020. That is by far the largest decline we have in our series, which goes back to 2010. And that is the key reason, as you can see, why we end up for global supply this year of a little over 960 million ounces. What was interesting, though, is that at the beginning of this year, we were actually expecting to see a recovery in mine production back to 2018 levels. And the key reason for that is that 2019, one of the key issues were that some mines, like Penasquito, for example, were affected by strike action. that was going to be unwound. Therefore, we're looking at a recovery. Because of COVID, though, you can see that we're now looking for this 52 million ounce drop. So we're actually looking for, the swing is more than 70 million ounces compared to the start of this year. On the right-hand side, though, this chart, just to give you a sense, the declines we see in Peru, China, Mexico are all because of COVID. Whereas in China and India, the positive deltas for 2020, for Chile, that is because of an increase in byproduct copper production. And for India, that is the Hindustan zinc, which is tapping into increasingly silver-rich ore. But overall, you can see it is a very difficult position for 2020. Just segueing into silver costs, this is, I think, quite a positive development. For the first half of this year, we actually see on an all-in sustained basis, costs declining, which is, I think, quite impressive given the impact of COVID-related disruption, which would have pushed costs up. But we're seeing higher byproduct credits and the closure of some high-cost operations as well. What we've also done with this chart, though, although this is a first half cost slide, is to overlay that with the Q3 20 average silver price, just to give you a sense of where costs are heading. And this, I think, gives you an idea that when we take a step back and think of where we will be for Q3, those mines which will be facing or experiencing, I think, positive cost margins, or positive margins rather, that number of mines is increasing. And I think that's quite a positive development from a silver mining perspective for 2020. Just segueing now on to global demand. And again, very heavy losses due to silverware, the industrial segment, which is partially being offset by a positive almost 50 million ounce rise in physical investment, which in terms of metals focus, it covers coin and bar demand. What I want to do is just touch very briefly on industrial demand. I've got a couple of slides here. We're actually expecting only a 9% decline for the full year total. That will leave it at a 5-year low, but I think the 9% decline in the current environment, I think, is extremely positive. And what we're certainly seeing is quite varied intra-year trends. An exceptionally weak first half, no surprise there, but we've been surprised, if we're honest, by the extent of the bounce back in Q3 and how that's being maintained at broadly similar levels in Q4. And we're certainly, I think, seeing some interesting developments. I think if we look at some of those, the key areas, the first one is on the automotive side. Now, in terms of global auto production, current estimates looking for about a 17% decline for 2020 in terms of passenger vehicle production. The decline, though, in terms of silver offtake will be far lower than that, simply because we are seeing the amount of silver that's used in vehicles rising year after year. And that's certainly a positive development. Moving away from the automotive into the PV or the photovoltaic sector. And yes, we are expecting another double-digit decline this year, but we think this will be a one-off and we will see a return to growth in 2021. I appreciate some of this legend is probably hard to make out, but I understand you can be able to view the presentation afterwards. But I think from my point of view, really the key takeaway and the reason that we've shown these 3 pies on here is not only to show you just how global installed capacity has risen so substantially over this time period, from just 17 gigawatts in 2010 up to 115 for last year. But it's also, there's a number of countries that are installing at least 1 gigawatt per annum. So in 2010, you can see it was just 2 countries, Germany and Italy. But in terms of moving ahead to last year, you can see we're up to 16 countries. And I think that diverse number of countries which are installing PV, I think this is testament to the strength of the industry. Changing tack, on the jewelry and silverware side, what we've done here is to overlay silverware on top of jewellery. For both markets, though, we have separated out India, just to show you how important India is to the overall market, and just to give you a sense of the weakness that we've seen in India this year. So if we think about jewellery market, we're looking for about a 23% decline to the lowest total in our series, and so much of that relates to India. So in terms of the negative deltas, it's about a 47 million ounce loss globally. India accounts for 24 million ounces alone. If we're thinking of the silverware market, that is, the overall market is falling to about 40 million ounces. The loss there is 21 million ounces. And India alone is 16 million ounces of lost production for 2020. Some of the reasons, of course, we think about the pandemic, but even before that, the economy was struggling. And one of the other interesting dynamics we see is that in rupee terms, the silver price has hit a record high this year. So I think we get a sense of how the market has struggled. From a positive though, and this is where the numbers could have been even weaker, is that the rural communities are a very important element for Indian silverware and Indian jewellery demand. The agricultural sectors in India were deemed an essential service, so they didn't stop producing all through this pandemic. India has also had a very decent monsoon, and so the agricultural or the rural communities have not been as affected as badly as one might have imagined. And that gives you a sense, really, of how weak other parts of the country have been this year. On the bar and coin side, this has certainly been a positive element, rising, as you can see, to the highest since 2015. Really, one of the drivers there has been the US market, but East Asia and related localities have also performed quite strongly. That has offset weakness in India, and again, because of the trend in silver prices, we've certainly seen some liquidations there. But I think as robust as a total is for this year, based on our current estimates, and I think it's also important to stress the market, as many of you will know, is really quite volatile, and so it's quite possible that over the remaining 5 or 6 weeks of this year, the figures could change quite dramatically. And so when we come to publish World Silver Survey 2021 for the Silver Institute next year, this is certainly one of the elements that we could see some upside, possibly downside, but I suggest some upside changes to this figure. Very quickly though, the other point to note is that I also don't think this represents the true level of demand, because we certainly had some product shortages at times this year. And if that wasn't the case, I think the figure would have been actually higher as well. So bringing that all together is when we combine the new elements of supply and demand, we have a surplus estimate for this year around the 31 million ounce mark. That will be the 5th uninterrupted surplus. And if one takes a step back for this 2010 to 2020 period, that gives you an increase in bullion stocks of around 250 million ounces. Returning to this year, though, that surplus we think will certainly be comfortably absorbed by investors, which is why we are positive about the outlook for prices. Again, taking a step back, thinking about the macro backdrop. And even though we have had that euphoria, and rightly so, around the news of the vaccine, we think that the environment, the macro backdrop will still remain supportive of precious metals prices, and therefore an investment as well for the foreseeable future. And that's why we think for 2020 and also for 2021 that the gold price will remain quite strong. We think that the lows will be well defended. We'll see how we do at the moment, given that weakness we've seen today is certainly getting low to our low for Q4. But we think that investor sentiment will remain positive. That will continue for some time. And then when we think of the outlook for silver, again, it's a smaller market. And when gold is performing well, silver can outperform to the upside. That's why we think moving into 2021, that silver will, from a high point of view, would eclipse $30 an ounce. And on that note, I'll certainly take question and answers at the end of the presentation. But on that note, I would like to hand over to Mike to talk about new uses. Mike, the floor is yours.
Terrific. Thank you, Philip. And I'd like to also thank the LBMA for the opportunity, as well as all the attendees today on this webinar. So I want to chat a little bit about the Silver Institute before we begin. Next year, we celebrate our 50th anniversary. And our members, of course, are the silver mining companies, refiners, those bullion suppliers to the market, as well as some end users. And our goals have evolved over the years. Today, they are to design and implement programs that will hopefully increase silver demand. And through our wide range of publications, including the World Silver Survey, we want to provide accurate and timely information to the market. So let's go to the next slide here, Philip. So before we get into the 5G, I'm here to talk a little bit about some of the new and novel uses of silver. And I think we're all familiar with the fact that essentially every component in many industries, whether it be a computer, a mobile phone, automobile, or an appliance, contains silver. Essentially, if it has an on and off switch, it's highly likely to find silver inside. And these dynamic new uses for silver are found virtually, every day, and people are experimenting with various technologies. But when you get to the 5G section here, which is beginning its rollout throughout the world, it really signifies the next generation of mobile communications. It's massively increasing download speeds, reducing time lags, and it's driving progress in many sectors, including the Internet of Things. Now, the electrical components that make 5G possible rely on silver. And with the growth of 5G in the coming years, silver's role in this technology is forecast to rise to approximately 23 million ounces by 2030, which represents a 206% increase over today. Next slide. So the latest chapter in silver's story in the batteries sector comes from Samsung, which recently announced improved electric vehicle batteries. Samsung has found that by incorporating a silver carbon layer into a prototype pouch-shaped cell, it enables the battery to support a larger capacity, a longer life cycle, and it enhances its overall safety. With the growth in production, and more importantly, demand for electric vehicles, this is a promising development for silver. Next slide, Philip. So current printing methods to layer molten metals on electronic circuit boards involve sintering, a process that heats the metal, and the metal is typically silver powder. They heat it to high temperatures before sputtering it onto the board. Now, if this process could be done at room temperature, it could catalyze a new world of wearable sensors that could literally be tattooed onto a person's skin. Penn State University researchers say they have accomplished this goal. So the silver sensors you see here are printed on the skin and have been able to monitor temperature, humidity, blood oxygen levels, and electrical signals from the heart. And the researchers hope to use this technology for other applications, such as monitoring symptoms of the flu and, of course, COVID-19. Next slide. Due to time constraints, we'll just sort of end here. We could go on for hours on these new technologies. We highlight many of these in our Silver News, which you can find on our website. You can subscribe to it. All of our publications are at no cost, and you can find that at silverinstitute.org. But to various technologies and applications you see here. On the left, you'll see a flight attendant from Kevan Aviation in Istanbul. It's a corporate jet management company, and they've produced the world's first airline antibacterial and antiviral crew uniform. The cotton uniforms are embedded with silver ions, which is, of course, a natural antibacterial agent. The fabric maintains its properties even after washing 100 times. And on the right, you'll see a mask that has small amounts of electricity built into it, which have shown to kill many germs. So one company is building the tiny silver zinc batteries into these face masks to keep the wearer safe from infection. The company is called Vomaris Innovations. They produce a polyester fabric wound dressing, which is already on the market. Now the mask is embedded with tiny silver and zinc spots that resemble polka dots for use in the face mask. And it adds another layer of protection in the battle against bacterial and viruses. So here's a couple examples of Silver's wide and growing demand portfolio. And we're very pleased to present these to you on a bi-monthly basis. If you have any questions, please feel free to contact the Silver Institute. And this concludes my public part of this webinar, and I would like to answer any questions if possible. Thank you.
Thank you, Michael, and thank you, Philip. I just want to ask a question firstly for you, Michael, just in terms of your silver going into clothing. Will we see more silver going into clothing due to its antibacterial properties? And if so, do you think that this could be a significant demand source for silver? Could this demand have an impact on the price?
Well, look, silver has been used in clothing for at least over a decade. Silver is being woven into gym equipment, tennis shoes, socks, and so forth. There are many companies, including Adidas, Nike, Mack Weldon, of course, which advertises its silver antibacterial, not only sports gear, but undergarments, boxers, and so forth. But the major companies have recognized this, and they recognized this several years ago. And yes, I do believe this is going to be a growing field, especially in light of what we're experiencing today. So, for example, Forbes magazine over the weekend had an article on a company based in Pennsylvania here, which is really at the forefront of making the solution that goes into these clothings. And their demand has risen over 220% this year alone for these products. But when you look at silver's use in health, and that includes silver's use in hospitals, in gowns, in operating rooms, used as an antibacterial in gloves and so forth. And when you look at it in water purification and you look at it in clothing, you're looking at currently at about an 8 to 10 million ounce market, but that is expected to grow as more consumers demand this natural antibacterial in their clothing. Thank you.
Okay, great. So you specifically see a growth in medical applications, you would say?
Absolutely.
Okay, wonderful. Philip, I have a question for you. So silver held in EFPs has risen over 300 million ounces YTD, yet total silver stocks in London vaults YTD has declined. So do you have any thoughts of where this 300 million ounces has come from?
Sure. I think that ties into one of the slides I showed, which had it was the paired chart of the LBMA stocks on the bottom and the Comex on top. So one certainly sees that increase on the Comex stocks, and I think that's part of it. And if you break it down by fund, by ETF funds, you'll certainly see that it is the growth in the US funds where a lot of the action has been this year from a global ETF standpoint.
Great. And another one for you, Philip. Just about ESG, you know, how big a driver can this be relative to gold and silver as investment demand over the next two to 5 years? Sure.
Well, I mean, I think as everyone knows on this webinar, I mean, that is one of the hot topics, not just in the precious metals market, but I think of other supply chains as well. And it's certainly something that we're looking at. But I think that will be, you know, from an investor standpoint and from a mining standpoint, it's certainly, I think, where the lens is really hardwired, and focusing on that and the transparency and improvements if they are needed at all. But I think that will be one of the areas from an investment standpoint going forward, very much so. And I think that will also be key to attracting investment into mining equities or into other vehicles from a silver standpoint.
Great. So Mike, I've got a question for you again about silver. So would you be able to elaborate on new work on silver recycling at the closed loop systems?
Sure. I think Philip could probably answer this question better than I could, but we are obviously looking at the ramifications of this, and Philip and I actually had a discussion not that long ago about the silver recycling side. It's something that we are clearly monitoring, and it's something that we will be elaborating on, especially in 2021.
Yeah, I think to pick up on that, I think that is something that we've seen for a number of years in terms of, from an environmental standpoint, overlaying that with moves, say, from informal recovery to formal recovery in some jurisdictions. So that's certainly growing. I think the challenge that is there is also from a price standpoint, because when you think about the economics of recovering it, I'm thinking more on the industrial side, of course, but when you think about the economics of recovering silver, one of the key drivers is what the gold price is doing there. And so I think, you know, if you have an elevated prices from a gold price perspective, that I think will encourage high levels of recycling, and that I think is offsetting this long-term structural move in terms of lower loadings. You think about how much, say, gold and silver is used in, you know, a cell phone or in computers. That's obviously declining. That's why it's important that, you know, one is having prices not necessarily rising, but prices, I think, staying at relatively high levels to encourage that.
Okay. Philip, I mean, as you showed in your presentations, ETF holdings have hit new record highs. Are you concerned that this will be sold off? And I guess further to that, do silver ETF buyers differ from ETF buyers of gold?
That's a really good question. That's something we scratch our heads about a lot, to be honest. And I think taking a step back and having a sort of a very 30,000 foot view, from a silver standpoint, there's a much more of a bias towards retail and high net worth investors, whereas gold is much more institutional based. And so when you think back, say, to 2013, when we had that washout, those heavy liquidations in gold, we didn't really see that in silver at all. Very sticky. And so fast forward to where we are now, there is always that concern of how does one view the ETF as sticky, or is it an overhang? And I think we certainly veer towards the former. And you think about some of the liquidations we've seen recently, they have been really quite modest. So I think going forward, we will certainly think those holdings will be much stickier from a silver standpoint.
Okay, great. I do have many more questions, but due to time, I'm going to finish on this last one. Is all the concern previously around manipulation of the silver markets by investment banks now done and resolved?
You finish with a curveball, don't you? I guess it depends on. I mean, certainly there's been in a number of cases. They've been in the public domain. I think though other elements about manipulation have, we don't always subscribe to that. So when we think about where the silver price has been, so post 2011 and the $50, and when prices were exceptionally weak for an extended period of time, from our point of view, we simply believe that reflected the underlying supply-demand dynamics and where investor sentiment was in terms of the silver market. And then equally, when we think about how the market has turned around now, again, from our point of view, that is the interplay of supply-demand dynamics. Overlay that with the where investment is, obviously reflecting the macro backdrop, and hopefully that came through from today's presentation.
Great. Michael, anything to add, or?
I would like to underscore Philip's comments and also add that I don't think the regulators across the globe are going to give up on manipulation or perceived manipulation in any market, whether it be precious metals or oil or grain or what have you. I think that that effort continues and will continue.
Great. All right. Well, thank you, gentlemen, both for all your answers and for your contribution today. Do you have any last words, or is it just goodbye for us for now?
Goodbye for now, but thank you again for this wonderful opportunity. On behalf of the Silver Institute, its members, thank you so much.
And from our side, if there's any questions we haven't answered, please feel free to reach out to me directly as well.
Great. Well, thank you so much. And as you can see on your screen, if you have any more questions after this webinar, please email us and we can forward them across to our speakers, or we'll endeavour to answer them ourselves. We thank you for joining us today, and we hope that you can join us in our upcoming webinars. We have 3 upcoming, our last 3 of the year. On the 26th of November, we have Evolution of Central Banks, Central Bank Gold Operations, and we have Simon Weeks hosting Isabel Strauss-Kahn. The following week, we have our LBMA Asia update with Sunil Kashyap, Jeremy East, and Nick Frappel. And then following this, as our last webinar of the year, we are doing a feature on TMO and Brexit. And then we will give you a break over Christmas. And thank you very much for listening to this webinar. We hope you enjoyed it, and we look forward to seeing you again soon. So thank you.